When it comes to investing around the world, lots of big questions. There have been questions in China, for example, surrounding the pace of economic growth coming out of the pandemic. India, meanwhile, has emerged as a bright spot. The IMF estimating it could be the fastest growing major economy this year. We spoke with emerging markets expert and the chairman of Mobius Emerging Opportunities Fund, Mark Mobius, who talked with us about both of those particular markets and the investing climate right now. Here's more first on what he had to say about the Chinese economy.
China is facing incredible challenges. First, of course, is the property market. That's such a big part of the entire savings of people in China. And the tanking of that sector means that confidence is going down. So that's a big, big problem for China. Everyone knows about it. The other big problem, of course, is the policies by Xi Jinping. His policies are really quite adverse to private sector and are more favorable to the public sector companies. So anybody looking at China may have to shift their view and go away from the private sector into public companies, government-owned companies that are listed. That may be an opportunity there. But the big, big challenge now is, of course, with the U.S. Janet Yellen, as you know, has been in China urging the Chinese to not produce so much and so cheaply because it imbalances the U.S. market and the global market. But I don't think they're going to be able to do that. They will want to do that. They would not want to give up on this incredible export ability that they have. But that's creating incredible tensions. And if it keeps on going that way, the U.S. will probably take action. And I think that's the reason why Yellen has made these 2 trips over to China to warn them and say, look, you've got to change your way of doing things. And of course, I think the advice of Yellen is good because China should be a domestic economy, not an export-led economy. Domestic consumption should be encouraged, but that's not their plan.
We do see those tensions play out in very specific industries as well. Semiconductors would be a great example. And I suppose for some investors, if you're buying shares of, say, an American company that does business in China, you've got to watch what happens. But for any investors who are trying to pick technology investments in China that might get caught up in the tensions, what would be your advice?
Oh, yeah, there's no question that China is putting incredible emphasis on technology, on advanced technology. That's the reason why I mentioned government companies that are in this field that are producing profits and are listed may be something to look at. But what the challenge is now is that you have a situation where Korea is now, previously Korea saw China as an incredible customer. Now, China is a big competitor. So Korea and other countries have to move up the technology ladder and abandon the policy of taking someone else's technology and developing it, which Korea has been doing. So it's going to be a big battle for survival. And of course, the U.S. is right in the middle of that battle. I don't know whether you've heard about what TSMC is doing in the U.S. That's an example where the U.S. is giving billions of dollars to these companies so that U.S. tech can be upgraded in the semiconductor area.
That's a big storyline getting attention again this week for sure. And before we move on from China, you talked with us earlier about how you're a believer in the story of gold and physical gold. Some have made the argument that the recent rally in bullion is in part because of demand out of China. Does that seem right to you?
It could be. Individuals in China probably are stocking up on physical gold because of the uncertainties they face. So I think that's probably a very insightful analysis that you're getting this kind of situation. Interestingly enough, if you look at the exodus of wealthy Chinese to Singapore and even here to Dubai, it's symptomatic of what is happening in the Chinese economy. So that's a real challenge for the Chinese government to prevent the outflows And one way to do it would be to get physical gold. So I think it's quite possible. The other thing you must remember, India is a big consumer of gold. And with a 7% plus growth rate in India, you're going to get more demand coming out of India. People in India are getting wealthier, and the first thing they'll want to do is buy more gold.
I'm glad you brought up India because I definitely wanted to get your perspective on the momentum for the economy there. Obviously, a global player that cannot be ignored for investors over the long term. We're preparing for general elections in the short term as well. What would be your one message on how to think about investing in India right now?
Well, first of all, you've got to be in India. There's no question that from a long, even a short term, India is a place to be. The growth rate is incredible. Modi will probably be, well, definitely will be reelected with a greater majority in the parliament or Congress. And he is implementing a lot of reforms, and particularly the digitization of the Indian economy, the use of technology in every sphere. Government policy is very oriented towards technology. So India is a place to be. Now, of course, the Indian market has gone up a lot, and there'll be corrections along the way. But even with that, picking good, solid companies in India is the way to go.
And a final question, speaking of markets that have been catching the eye of investors, what's been your sense of the situation in Japan?
It's very interesting that Japan, of course, is now trying to change their stance and increase rates. They've had a big balance sheet problem, as you know. And I believe that Japan is now moving into a new era. One of the interesting things about Japan is they're allowing and encouraging more and more immigration. In other words, they're becoming a more open society. And that augurs very well, I think, for the economy and for the stock market. So I think we've got to keep an eye on Japan.